This has been High Tech Week. Boy, has it been High Tech Week. And we have a high tech guy here to talk about high tech. So Jeff Lutz,
How's it going?
how you doing, man? All right, listen, we had Jensen Wang, who just couldn't have poured more praise on Tesla and Elon Musk if he tried. I mean, if Elon had written the script, it couldn't have been any nicer. Followed up by Jim Farley of Ford also saying that Tesla was far, far ahead on full self-driving, and that Tesla did it the right way and the rest of the industry is doing it the wrong way. And but your interpretation of all this high tech in the last few days has been that uh, it gets misinterpreted like every single time, and that even Jensen Wang, who right now is kind of the fair-haired boy, is misinterpreted, and his stock goes down 6% the day after a great talk. So fill in the blanks for me a little bit in that regard.
Yeah, I mean, well, these titans of industry certainly get it. They certainly know what they're talking about. Uh, when I say titans, I mean Jensen, Elon, maybe one or a couple of others could be lumped into that category, but not a lot, by the way. But I think the biggest alpha for retail investors is the misinterpretation of literally everything that gets reported on by the company. And if you can find a group of people that can properly interpret what's happening, and then you can kind of like, pick four or five things and then go back and check them and see if they were they actually right about it, because nobody's going to get everything right. But at least what you want to do is you want to accurately interpret what's happening. And some recent examples were for example, this in December, this Model Q conversation that blew up, that some investment bank said, "Oh, Tesla's doing this and that," and everybody started like article after article, like, "Oh my gosh, there's a new compact vehicle." No, this is the same vehicle that was on page 10 in the earnings announcement, and what you had is them 7 weeks later reiterating that they're doing the vehicle. So totally misinterpreted. Then more recently, the announcements from NVIDIA of like, we work with a lot of people in the auto industry. We have a computer that goes in the car. This is the same thing, but just a new computer, a new version. But and even Jensen would say like, these are tools. This isn't the You don't go to Best Buy, buy one of these things and have the Geek Squad install it in your car and it's self-driving. There's a tremendous amount of engineering that has to occur, and there's a tremendous amount of data collection and interpretation and use. There's a network infrastructure side of this. There's so much of this stuff that has to be done, and it just gets totally misinterpreted. It's like, oh, well, they're going to work with Toyota. Toyota is, you're literally going to flip a switch and hybrid and gas powered Toyotas are going to be driving themselves all over the street. And you just have to ask yourself simple questions. So first off, I respect, I praise for NVIDIA. Like, they are doing really good things. They are the foundation for how training occurs. I mean, there are real things that they're doing. And if you're a company that is underskilled, you have a non-technical CEO or just a non-capable CEO, you'd be incumbent to work with them. But in terms of like understanding what end state looks like, that's a completely different conversation. And I think that's, what the when some of these things come up, you just have to ask simple questions and pressure test it. So in the case of this, you just ask a simple question: where do I go what car OEM, what dealership can I go to where I can test drive a car that has the NVIDIA computer, the NVIDIA network infrastructure? I type in an address, it takes me from point A to point B, flawlessly or nearly flawlessly, or as good as Tesla FSD. Just tell me the car, the brand, and where to go to do that. And as soon as you ask a simple question like that, well, you get the answer, well, nobody. And then the next question you get is, well, it's, the competition's coming. And I had one of my followers ping me and DM me. He's like, this has been the theme for decades, literally, with Tesla of, from the time they built the first EV to even mass adoption of EVs, and now full, like literally the competitions and here it is now 2025, the calendar has turned. And today, it's still not clear that somebody is making a gross margin positive pure EV anywhere in the world.
The closest one, closest
Certainly
one,
not in the United States
right, right.
or Western Europe.
Maybe
It's
the
even
U.S.
debatable. It's even debatable in China because we don't understand
Right.
the levels of funding and subsidies that are occurring from the Chinese government. So it's 2025 and we're still in this position. And Tesla's about to literally leapfrog their manufacturing design methods that got them to this point. They're about to leapfrog them again, literally within this calendar year, to start a whole new factory and a whole new product into production that will leapfrog it. But you still have people thinking that these things can be like literally, like copy, paste, and caught up. Same thing on the software side with FSD. This is not getting solved 15 minutes later after Tesla. And all you have to do is listen to Jensen, listen to Sundar, and listen to how they have a grasp. They understand the technology and the business model. And that's what I would leave it with. I'll turn it back to you, Randy. Is just there's so much again, really just simple conversation around, well, look, I see Cruise, I see, Baidu, they have it out there. They must be ahead. Well, it's got to be like a truth table. In digital logic, there's a thing called the NAND gate, and both sides, both inputs have to be true or high for the output to be true or high. And to me, both inputs here are, do you have a valid technical solution? And do you have a valid economic solution, both at scale? And if both of those are true, then I think you enter the conversation. But right now in the world, there isn't anybody with a full self-driving solution at scale or technically capable, and certainly not both together. And and to me, that's where the conversation is. That's what Tesla has set out to do. But I find it so interesting that so many of the analysts never want to have a business model conversation about, well, you see it in the street, but that's the end of the conversation, or does that company actually have a valid business model that scales? I'm so dumbfounded that that's not the primary conversation of analysts.
Yeah, of course, I've just been criticized today for being in the same cult as you, but
Yeah,
here I am agreeing with you again. But let's
yeah. Don't
let's
dare do that.
I don't agree with you. So let's take a look at something that Nicholas Gibbs had to say last night, kind of along the same line, and that is with regard to large language models and AI, the future of AI, where things are going. And Nick feels that this is really a two-horse race at this point, that it's really Google and xAI. They are the two players. Some other folks, and there's a bunch of people that are kind of agreeing with that right now, like on some of the other analysts, if you will, the Brad Gerstners of the world are saying, look, you know, Google has now pulled ahead, and actually in terms of IQ, that the Grok 3 probably will have a higher IQ at 140. So is that how you're seeing it? Do you believe that these are, I mean, obviously somebody could have something in their skunk works that we have no knowledge of that could change everything tomorrow. But in terms of what we do know, in terms of where the players are, does it look like these two are the ones that are going to be racing for the top spot?
I mean, there's certainly two of the key players for sure, and and that battle is being won. And I had this conversation. I was asked about infrastructure spend, and look how much Amazon's spending, look how much Google's spending, look how much Microsoft is spending, and then look at XAI. And I said, well, that's an input function. You have to look at their ability to convert that CapEx spend into a ramped up product. And when I say ramped up product, in this case, a ramped up data center, and how long, what's that time to value on it? And then once it's ramped up, and then what's the utilization of it? And is it being effectively utilized? Because you could take this $80 spend from Microsoft, for example, and if it takes them this is what you have to do in these situations. You have to study how long does it take you to capacitize, facilitize, and get online, and then what utilization rate do you actually terminate at? And once you have these conversations, all of a sudden you realize, well, there's an efficiency on my $80 billion in spend. And some people are really good. People who build these systems should be targeting, just like any factory, you should be targeting greater than 80% CapEx utilization. And you really don't want to actually be at 100% because that's when things break. But I just think that so many of these conversations are so basic in nature of just looking at spend, but not actually looking at the conversion and the return on invested capital of that spend, and who has the track record, who has the history of driving that efficiency. But yeah, it's going to be it'll be a couple of players. But I tell you, a lot of these decisions, I think this is one key takeaway for the listeners or the viewers of this is a lot of these key decisions are architectural decisions that were made, years ago, and not all of them are going to work, but some companies are making far superior architectural decisions that are going to allow them to bring up these systems faster, to have higher utilization, and to ultimately deliver a product in the physical AI real world that changes people's lives that they're willing to spend money on. And once you examine that whole chain, just like that conversation we just had about an AND gate and how the inputs need to all be basically true for the output to be true, same thing goes into this situation. And yeah, all I would say is that there's a kind of a clear winner right now that I see, whether they're in first, second, or third in any one of these races. And I also see a clear winner in terms of vertical integration. So if you can integrate Grok in a Tesla vehicle, which has been the plan. By the way, this isn't news either. He's talked about this. Oh, he's responded to posts I've done a year and a half ago on we will do this. So they're going to do it. But when they do it, they're not going to be paying themselves a margin. So they're not going to be, so in terms of the unit economics efficiency, and then just in terms of the performance, you imagine the system design work from the mic input in the vehicle to the speaker output and that conversation you can have back and forth. Imagine the performance of that system when it's designed all under one roof, one CEO, versus it being spread. OpenAI does this and Microsoft does that, and the car integrator does this and that. And all of a sudden, you're trying to bring the whole system together and fire it up. Guess what? One's going to win out in time to market, one's going to win out in performance, and one's going to win out in cost. And it's usually one of those is going to win out in all three together, and the one that's vertically integrated under the highly technical CEO is going to win out. So yeah, it's a couple of horses right now, but there's going to be a lot of people participating, and this will be nonlinear at times. I can imagine in terms of who's ahead, but I think Tesla's and NXAI are in a very good position.
So you must have read my mind, because the very next paragraph asked the question about Grok in the car. And yes, I know that
Yeah.
this has been talked about for a long time, but he did say soon, whatever that means. But here's the next question that everybody that I'm talking to is asking. And that is the Grok in the car going to be 3CPO, or is it going to be Siri? And if it's going to be Siri, it's going to be a pain in the rear end. And if it's going to be 3CPO, then it's going to sell cars all by itself. I think. Maybe you don't agree. I think there will be people,
Yeah.
adults and their children, begging them. I think there will be cars that will be the reason they buy it, will be if it's 3CPO.
Yeah. I mean, I think, yeah, it's not going to be Siri. It's not going to be this slow thing that, gives you, helpful answers of a very small percentage of the time. Um, by the way, funny story that one of the two founders of Siri worked 30 feet away from me at Motorola in Illinois, believe it or not. And he went off and founded this. But anyway, I high respect, they're way ahead of their time, but forget about the branding of Siri.
Right.
The way this is going to work in the vehicle, it's going to be engineered from the ground up. It's not going to be all this cut and paste stuff from all these different companies. So it's going to be very low latency, very high signal, very small noise. It's going to be an amazing experience. And Tesla and Elon companies, I should say, are developing multiple things that will sell the car by themselves. I think V13 2.2 is at the point right now, and I made this post a couple of weeks ago that how quickly can we get every car upgraded that does test drives, and can this be just, how do we get people in the door to do the test drive? Because I think again, this is a very, very small exposure out in the world, and if people see this, I think it's going to sell the car itself. And I agree with your point too. I think a properly integrated Grok conversation mode, having it either meaningfully give you helpful information in the vehicle and displayed on the screen concurrently, as well as even helping with vehicle control and maybe rerouting at some point. Like, hey, I need to go a little bit faster.
Mhm.
You know, I think it's just super powerful. I think these things alone sell the car by themselves. And this is what Tesla's doing. This is a great redistribution of value inside of the vehicle. The value is going into the computer. The value is going into the screen. The value is going in. That's why the screen gets bigger in the robotaxi, by the way. They know where the consumer value is going to lie. And I'm sure in the acoustics and the audio in the car, they're going to spend in the areas that are going to drive a meaningful experience for consumers. And finally, somebody will say, well, Volkswagen already has an LLM in the car. Well, some of these things are really, clunky. Like, they're just they're kind of grasping at things to get things going. I'm not saying that one brand's clunky over another, but I think the Tesla solution is going to be, very sleek, ground up, low latency, high signal, low noise, great experience, great output. It's gonna sell cars by itself. I agree with that.
So we just had Elon also commenting about employees driving unsupervised cars. Was that a new statement, or was that the employees that are driving the other employees in the test run up there in Northern California that has been talked about now for a few months? Is this an over and above that, or do you think that's the same thing?
Yeah, it's actually the reverse. The unsupervised cars are driving the employees. No, they talked about this in Q4.
Okay, all right.
So it's not new information, but anytime a company reiterates information, it's helpful. Even the head of IR for Tesla in December reiterating the lower cost vehicle being on track. That is new information, even though it's the same information from week 3 in October and from the prior earnings release. It's good to see them reiterate things because then that they're on track. But many analysts were treating some of this commentary as like, oh, this is new. This is like, no, it's not new. But it shows you that, Tesla has things running in the back. If Tesla talks about delivering something, they tend to have it running somewhere at some level of scale, and you have to in the background. So yeah, unsupervised rides with employees probably need to do it. And guess what? I mean, those employees are under NDA. There's an issue. They probably have the ability to manually control the vehicle if they have to. Like there's a whole bunch of things that comes with that, but then you just get a tremendous amount of data.
Oh yeah, it's got to be huge. And I would imagine by now, if Elon is acting as confident as he is right now, that experiment up in Northern California must be going quite well.
Yeah.
All right, on another subject, we are got Juniper coming soon. A commenter on X asked me why I thought Juniper would increase Model Y sales. He reminded me that the Model 3 sales did not jump up. Randy Kirk was sitting there week after week saying, oh my gosh, this is the best sedan in the world at a great price. Everybody agrees it's an amazing product for its, for its type style and whatever else. And yet Model 3 sales were okay this year, but they were not great. They didn't go crazy like I thought they would. So do we think that Model Y will be any different, or do you think this guy might be right and it's going to be, well, it'll keep the sales #1 in the world, but it won't materially increase Model Y sales?
Yeah, I think what a lot of people are missing is, so first off, refreshing the car is going to help extend it for a long period of time. And it's a good thing. And if I'm Tesla, I'm looking for ways to add consumer facing features and reduce costs in other areas that consumers can't see. And I think they're going to do that. But what people don't understand is that EVs are not 100% penetrated in the world. Like if we're having a conversation about smartphones basically have near, unless you're going to like some sub-Sahara area and, they're basically, very high penetration rate, very high. But in EVs, you're still in the, 20 something percent, global penetration. I'm not saying that we haven't hit major population and centers of wealth, but you still have very minimal penetration of the category itself. So as the category grows and you have the best product, the best value per dollar, the highest selling product, it behooves you to keep that thing running efficient. It behooves you to platform it with your second highest running vehicle, the Model 3. So platform that LED light bar in the vehicle, platform the steering wheel, platform all different things you possibly can. Because then what you're going to do is you're going to take the cost down of the Model 3 when you do something like that, because now you're going to be spreading fixed cost and capex cost at your supply base across a larger set of volume. So there's a number of reasons for Tesla to do this. I think it's imminent. Will it, will it drive a higher number? I think we'll drive the higher number it's going to help us maintain the number. And as penetration grows in the world with EVs, like this will help it continue to grow along with it. What's going to really drive the number higher is for Tesla to get vehicles below $30,000 out in the marketplace. That's where Tesla is going to start eating share back from other people that they compete with in other geographies, including the United States. So that's where I think the next big thing is for Tesla. And if they can start addressing some categories that aren't addressed, if it's a larger Model Y, for example, or if it's a smaller hatchback vehicle, smaller than the Model 3, now you're going to start addressing segments of people that would that need addressed in order to grow the available market size.
And I've been saying over and over and over again that the day that Elon announces that they're unsupervised, that FSD is 100%, you just get in it and go and you can take a nap, that is going to increase sales immediately, not only for the traditional purchaser who wants to use it for their own use, but also the commercial users will be all over that, and that will drive a very significant increase in sales.
Yeah, I think so too. I don't know if it's the day, but I think it's going to be leading up into it and after. It's going to be about exposure and eyeballs and it really meaningfully impacting people's lives, which I think it will. And this is alpha for retail investors right now. If you've been a retail investor and you've been driving V11, V12, and now V13, you know that you've used something that you probably would have used 10 to 30% of the time to now something that can basically do all of your drives. And you've seen that relative progression. You know that the street doesn't fully know it yet. Although I would say the Tesla is starting to get, I would say, considerable benefit for future forward execution. You don't trade up at this multiple without that. But at the same time, using PE is not in isolation is not the only way that I would value Tesla. In fact, I would recommend against that.
Oh yeah. Let's talk a minute about Cybertruck. A lot of people are disappointed. I am disappointed. Do you think that there's anything systemic, or do you think this is timing and the $750 credit and or $7,500 credit? Or what do you think's going on? Why didn't Cybertruck get their numbers? What do you think's going to happen in quarter 1?
Yeah, I think look this up. I encourage people to look it up. I'm going off of memory, but you have to look at market size of some of these things. So I think in the United States there are 300,000 trucks at 100,000 or above sold each year. And if I mean I don't know, we'll know what the Cybertruck numbers are here pretty soon. I think the number is 300,000 vehicles, and 100,000 of those vehicles are trucks.
Oh,
Is the number I believe. So if Tesla ships half of them in its first year of existence, of all trucks 100K or greater, because that's basically what the price was for most of the year.
yes.
Then I would say that that's pretty darn good first year. And now remember, this is about market penetration. And it's only been in the US. Very recently did it hit Canada and Mexico. So, now we have to go global with it. They got to get the cost structure down. They have to release variants that didn't exist before that can be released at lower price points. They need to get the 4680 dry electrode going. That's a big portion of the cost of the vehicle. And I think it's got a good future ahead of it. It's one of those things I will tell you, when you do a groundbreaking product that no one's ever seen before, you're taking all kinds of chances on the industrial design. I remember when we were doing Razor, the first Razor phone at Motorola, and I remember when we assembled the first one by hand in Illinois. We're all kind of starting looking at it, and at some point we had to. This was many months prior to the launch, if not more than a year. We had to put together a business plan. It's like, what do we do? Like, what is this product? Like, what category does it go in? Like, how many of these do we think we're going to sell? And it's so unique looking because at the time, everything was a Nokia 3310 or some little candy bar. And Motorola had a really good footing with clam phones, but we had this very special thing. It was going to be $500, which is very expensive for dumb phone. And we had no idea. So we said, 400,000 or 500,000 units is the lifetime volume of this thing. Build a supply chain for that. Let's go. And then the thing went on sale in the first quarter, and they were all gone. Within a couple of weeks, and we couldn't keep it on the shelf. So the next quarter we double it. Next quarter we double. It was history. So it's just an example of when you build a product like this, you really have no idea. Now there's some pre-order data, there's some the intel that Tesla could have, and you're also dealing with macroeconomic conditions too. But I don't think we still know the ceiling yet on Cybertruck. It's such a good product. It hasn't been available for test drive until very recently. So you're really buying this category breaking, and you're buying it on blind faith, and that's really for the Tesla faithful to do. Normal consumers that aren't attached to the stuff like you and I aren't making $120,000 purchases sight unseen. So I think people really need to calm down a bit and understand just how normal consumer behavior. This does not hit mainstream yet. When it hits mainstream and it hits more global adoption, you're going to have a very, very successful product on your hand, I believe.
Brian Wang has come out with his number. He believes that it's going to be a 20% plus margin in earnings call coming up. He
Yeah.
used as a major reason for his earnings call at above 20% the Jeff Lutz theory of 2% per quarter reduction in cost of goods. But he also included the increase as another major component, the increase in uptake on FSD, as well as the increase probably in recognizable portion of that uptake in quarter four. So do you think we'll bust past 20%? And yeah,
I think we have a possibility of doing it. I will also say that it is very humbling to even be on the inside of a company and try to get to what your final COGS were and your final gross margins. It's a humbling, difficult thing to do. So when I see analysts on the outside, who I respect, especially Brian and others, trying to nail this gross margin within the 1/10%, I'm like, hats off to you. It could go anyway, plus or minus 200 basis points easily. And it's Tesla gross margins are becoming increasingly difficult to forecast because the sources of revenue and their associated gross margins are rapidly changing. If this was just a business bending metal, I would say you'd be able to look at the P&D report and you'd be able to get within a couple tenths, and I'd be here with my spreadsheet doing it and giving you a number. But now you've got the ZEV credits, you've got the IRA credits, you've got FSD revenue, you've got all kinds of things. You have things being released in China now relating to FSD. You have a global macro data point on EV production that says many many players pulled back on their capex, yet the standards have not pulled back in terms of ZEV credits. So I actually think Tesla is in position for an increasing amount of ZEV credits in this year. I think it's going to be an ungodly high number. I'm not sure if it's this quarter or next or just every quarter this year, but I think those numbers are going to increase. And no, there's not one leader in one country that can erase that. A lot of these credits, by the way, are coming from states. There's like 15 or 18 states now that have adopted the California standards. Of course, the president can weigh in on this and affect it, but he's not the president of Canada yet, not the president of Europe and the European Union. So these credits come from multiple locations. So anyway, my bottom line is to me predicting gross margins on is becoming increasingly difficult to do. But as I look at Tesla, there is no company with its composition, how it drives gross margins, how they still have engineers and supply chain engineers working on the Model Y, Model 3, and making it more efficiently. And and then their volume leverage, their volume per model leverage is greater. Nobody talks about these stats because they don't know. I don't know why their volume per model leverage is greater, I think, than anybody in the auto industry. So they're going to be able to get greater drawdowns from their supply base. The Jeff Lutz rule you talked about, it is fairly typical both in auto and consumer electronics to drive about 1.5% deflation just from your supply base. So this doesn't include gigafactories. This doesn't include, by the way, this doesn't include necessarily negative things that could occur post fact. Like, for example, excess and obsolescence could be after this fact. But in general, when you're buying a bunch of material and you have consistent or escalating volumes, you should be able to get at least 1.5%. The better companies are driving, 10% annualized on material deflation. They just are. Like they're going into the suppliers and saying, look, I've taken you from here to here on volume. I've taken you from here to here on share. I've seen your yields improved. I've seen your process times come down. I've seen the number of people you've been able to pull off the line. I have no problem with you, I have no problem with you making money and making more money by doing that, but you're going to share some of that with me.
Right.
Otherwise, you wouldn't have none of this business. So that's how that part of the process works. What worked against Tesla in Q4 is just slightly less production than the prior quarter. So the question you have to ask yourselves is: did they take capacity offline? Did they lay people off? Did they furlough people, send them home? Did they manage that? If they managed it, then it's not going to be as big a deal as people have talked about. What I would have liked to have seen, like one of the reasons we got a very favorable surprise, I think, in Q3 was the precipitous jump in production and utilization of fixed assets in the gigafactories. And I would have liked to have seen that be higher. At the same time, the drawdown in inventory prevented some of that. You're supposed to do both. I'm not making excuses for Tesla. Like they should have probably been able to produce more and draw the inventory down. But look, I've been in these positions before when you're looking at the cards on the table, be like, all right, we're going to transition to Model Y. I want the inventory going to zero. I don't want to deal with any excess, any obsolescence. That was the right move. So, but that'd be the one thing I think that's working against Tesla. The other thing would be Cybertruck will be a drag. And then I think they're going to throw off a lot more cash. That was a huge drawdown in inventory. So that drawdown in inventory alone is $1.4 billion in cash, I think. So they're going to throw off some serious cash. That's going to be a positive. The only thing I could be worried about on the inventory side would be the balance sheet inventory. Like, are they making moves now for Megapack, pending any tariffs that could be coming on China LFP or export restrictions out of China? China may go on offense here. So if I'm Tesla, and by the way, Tesla supply chain, I'm not smarter than them. I'm not smarter than the management team. I'm sure they're thinking about, should I be bringing an inventory of LFP cells in size in December, in Q4, and in January prior to the new president taking over?
Well, speaking of the new president, what a great segue, Jeff. You set that up perfectly. So we have 12 days to go. I want to ask you this. I had this brainstorm in my own brain yesterday, and that's can be troubling. But I asked Nick Gibbs about it last night. I won't tell you what he said. Maybe you listened to the show. I don't know. But anyway, I said, the last time that Trump was in office, probably the biggest complaint against him, not having anything to do with policy, was that it was kind of a continuous chaos internationally, even domestically. There was always chaos because, in a way, that's how he works. He throws out these ideas, he throws out these approaches. He always throws them out with bombast and with a lot of, look at trying to get the maximum he can possibly get out of whatever it is, with a willingness to draw back if he's not able to get everything he wants. He doesn't do it the same way Ronald Reagan does it. Ronald did it much more quietly, and he got, what did he get? 90% of the things that he promised to get done, Reagan got done, and so did Trump, but Trump did it much more loudly. Do you think based on the last 10 days or so, the last 20 days or so, that the chaos is going to be as big or greater given Elon and Vivek and all the things that are happening already?
Yeah, my view is media wise, it's going to be viewed as highly disruptive. This is the only thing that can really hang on is that, is kind of making theater of it. But I think when you actually look at the net effects and the benefits to America and the benefits to the world, I think when we look back, it's going to be a very monumental term. And that's how I think. I just think the theatrics are going to be played up. I think the president-elect is a fan of the theatrics as well. I think his first buddy is a little bit too. Um, but I think they're also about delivering results. Not everything landed, right? Obviously, we have to be realists. We didn't get, new beautiful healthcare and things like that. But a lot of things were right in the world in terms of peace, in terms of, coming in with 2.5% inflation and going out with 1.5% inflation. You had a once in a, 100-year pandemic hit, and that's going to cause all kinds of distortion everywhere. And anytime you have something like that happen, you're going to have people on either side of it saying it was managed well and not managed well, and you'll find fault in everything. But yeah, I think the next 4 years, you're going to see a lot of theatrics in media. But if we can get 2 trillion out of the opera, which I am firmly confident is possible,
Hmm.
and we could fix a lot of things related to energy, which really drives the cost of almost everything. And then we can effectively make these transitions. This is why it's so important to have Elon in his proximity to the White House. There would have been no way to do these three major things, which are AI regulation, autonomy regulation, and then humanoid bot regulation and general acceptance of these things coming into the economy. And how do you design the next economy, post fact of all these different things? You're taking drivers out of the system. You're bringing AI. You're bringing agents. And Jensen Huang showed agents doing HR work, doing finance work. They're pictures now in the org chart. Like they're not even real people. They're they're people that live inside of a computer. And how do we accept this and say, all right, we're on a different leg, we're on a different step of the pyramid, and now we're going to go off and do even more important work to do, X, Y, and Z, and we're going to have these other mundane tasks being done by AI. So having Elon in his proximity to get those three things done, AI, autonomy, and humanoid, from a government regulation perspective, this is when people ask the question of like, is all this noise worth it? Is all this, and I'm not saying I agree with everything and how it's done, but the net effects to Tesla are going to be greater by his proximity, I believe, than the harm. And certainly we'd be in a much different place if the election went another way.
Oh boy, that's true. All right. Well, so the place where I got my criticism for being in your same cult was all around the issue of tariffs. So we
Yeah.
have the whole, tariffs, 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 tariffs. All we hear about right now, especially in the financial world, is tariffs. The Fed said today in their notes, "Oh yeah, we're worried about inflation because of tariffs." And then you and Gary and I on X and a bunch of other people too, but primarily I would say with the three of us went back and forth quite a lot on the business of tariffs. And I, of course, agreed with you 100%. I said, Jeff, Lutz is right because you said what I had said a month ago, which is, yeah, tariffs can impact retail, but they don't always.
Yes.
And so tell me your side of the story because my fans have already heard my side of the story. So tell it from your side.
Yeah. I mean, I when you're put, I have experience of driving distribution into over 155 countries. And what I saw, it was just your jaw would hit the floor in terms of the hoops that American companies had to jump through to get product into a particular country or jurisdiction. And the things that, they would make us do all the way up to and including, you must build a factory here to sell your product here. You must break your product down, build it, break it down, bring it in and rebuild it again, or you must just pay this duty. You just pay it, like pay the duty. And then I would go back and I would look and I would go look up. I'm like, well, what duty do we have on them to import to us? And it'd be like nothing. It would be, nothing. And I'm like, wow, we're just like, we're on the other side of this. And then we look, well, yeah, that's a kind of a, if you have a globalist policy of like you want to build anywhere and you want to ship anywhere, you're going to deal with these things because there's going to be these set of countries that don't have those policies. And it was a lot of countries and it was a lot of volume. It was a lot of population centers. And, this whole time where we would be charging, I think when Trump came in the office, he was charging, or the US was putting a 2 or 2.5% tariff on vehicles coming in the United States. And China would have this inbound VAT of like 17% on anything. And then they would go add for various categories. And so everything's lopsided. And I think, this is the perspective that I'm coming from of like, prior to 2017, everything was lopsided. And now he's starting to even the score. And I think it's for the greater benefit. And I think in many situations you could do this, potentially get all the tariffs dropped. Like, wouldn't it be great, if the EU's got a, 15% on us and we've got a 20% on them and it goes back and forth. Wouldn't it be great if they just dropped it? And because we know we can outcompete with some, so you have to know like where can you outcompete or where are you just completely beaten? Like right now, we're completely beaten except for Tesla on EV.
Right.
If China ships a $20,000 or $15,000 EV, and they can meet our standards and so forth, they're gonna outsell us, and it's gonna crush our auto industry. They can't ship a $35,000 or $40,000 EV, and it won't really work here. It would dilute some volumes for sure, but they're not gonna cause the kind of impact they wouldn't. So when you're doing tariffs, you have to understand like where are you just summarily beaten, and you have to protect your existing industry. Where are you doing this purely for negotiation? You should be doing all of them for negotiation. You should be trying to get a better deal on the other side of all of them. They shouldn't be just, permanent in nature, but some of them have to be. And I would say Mexico is probably the biggest, even a bigger risk than China, or certainly in the same conversation because we have a free trade agreement with them. We have EVs flowing in. We have cars flowing in. 1 in 3 cars, I think, driving around the U.S. are made there.
Hmm.
Non-Teslas, I should say. Every Tesla you see in the U.S. is made here.
Right.
But you have cars coming over the border. I think 1 in 5 from Korea, 1 in 3. These are big numbers from Sorry, not Korea. 1 in 5 from Canada. 1 in 3, roughly 30% or so coming from Mexico. And we don't need that. You have different raw materials, steel, lumber, and so forth. And now you have situations where the U.S. manufacturing cost is going to be higher, but now you're going to have these situations where, like in the case of steel, there was tremendous dumping occurring, and that causes all kinds of problems. Rubber, steel, wood. So anyway, in the camp I'm in with tariffs are Tariffs are a good negotiating tool. There are some situations where you have to put them on because you're currently beat in the industry. And if you take them off, you might as well tell the 3 million people in the auto industry in the US to go find different jobs. That's what would fundamentally happen. I don't know why people think that there's any other, by the way, it's kind of already on the way to that
Right.
because our auto industry used to produce 21 million units in 2017, and now we're at 16. So you've already had 5 million units, or over 25% of the capacity and labor and capex hollowed out, and that progression would accelerate and continue. So I'm in the camp of you got to protect industry, but at the same time, the way you win in all these things is you out innovate. Once you out innovate, you can win every tariff battle. Because if you have the better EV production method, if you have the better set of AI or silicon, uh, you can't they can't win on the other side. They have to do a deal with you. So that's where the U.S. should be focused on. So yeah, that's where I see it on tariffs. And tariffs aren't always inflationary. That is a media narrative. That is an uninformed, lazy media narrative. And you really have to do what in my experience, what I saw happen was there's somebody on the other side of that tariff building that product. And that somebody runs a factory. And if the US is 50% of their sales, for example, and the president of the US says, I'm putting a tariff on you, they're not going to say, well, fine, I'm just going to raise my price and everybody's going to keep buying my product. They don't depend on that. They know the price sensitivity of their product. So what they do, excuse me, is they go look at their manufacturing, they go look at their margins and say, look, my fixed cost absorption is going to go through the roof if I leave my prices where they are because Trump's going to add, 100% to it. So I'm just going to take my prices down by this. I'm going to keep my factory running up at this level. I'm going to keep my costs down, and that's going to be the best fit method for me to maintain my margins. So I'll eat up, 35% of it. Now, you on the other side, you got to eat up some of it, and some of it may go to the consumer in some situations. But to say that it's all borne by the consumer and it's all inflationary is a really uninformed take of how what occurs in reality. I don't talk to media, but I don't want to. I don't ask media this question because media has never built anything. I don't ask economists this question because economists have never built anything. Talk to a builder. Talk to somebody who has built product in volume, imported, exported, actually done the work, and you'll be in a much better situation. And by the way, it's information, it's signal. You take it, you understand it, and then you decide what you do with it. You don't have to believe everybody outright. But if I'm going to talk about this, if I'm going to have a conversation about this, I'm going to talk to a builder of
So,
product.
and then on the other side of the coin, your buyers, you had lots of buyers that are buying from all over the world. If the buyer came into you and said, gee whiz, we're going to have a 20% increase in the price of this product that we're using to build a phone or that we're selling
Yeah,
outright, would you have just said, oh, well, okay, raise the prices 40%, or would
no,
you have
yeah,
said,
it won't work.
the way?
Yeah, well, I would say like, look, we're going to have to let's do the analysis of building it here. Let's do the analysis of getting it built elsewhere, and let's put a lot of the work on the exporter as well. You know what I mean?
Yes.
So as the importer, you don't have to take all the burden because you ultimately have the power to say like I'm just not going to import it. You have to solve this for me. And so it's not necessarily the exporter too that's to solve everything because they have upstream suppliers that they can ask for help on too. So it's a complex thing that to kind of discuss. It's not an elevator speech. The easy, lazy elevator speech is tariffs raise everybody's prices. But, unfortunately, there's many other factors that drive inflation up and down. In some cases it can, but tariffs went on in 2017. Inflation went from 2.5% to 1.4%. Those are just the facts.
Facts.
Now, there are other factors in that. I'm fully aware of that, and so is everybody else. But to say that they're automatically inflationary flies in the face of what actually happened.
All right. Well, I don't know how we always do it, Jeff, but somehow we always manage to get it all done. So as as I always say, it is a pleasure having you on. It's nice to have another person who's had manufacturing experience, although your manufacturing experience is a whole nother level than mine. But but it's kind of
Yeah,
all
it's all different. Yeah, you learn from everybody, and everybody's got
it's it's
differences, and I think you can learn at any scale from anybody.
right. All right, Jeff. So I'm going to let you go, and I'll talk to these folks just a minute longer about what the numbers look like today. You know, we never did ask you whether you think Tesla is going to be range bound now for a while, or whether it's going to take new news to get the stock to jump, or what do you think?
Yeah, probably range bound for a bit, but I think more of this range bound is occurring because of the VIX is going up. There's a lot of instability in the market. There's a lot of mixed news and information. Um, just have a filter for what you're seeing and what you're looking at. Like this news that came out after hours today about, further chip export expansions. Like just understand the market size that's being discussed and the fact that demand is probably running at 200% of what they can actually ship. And then, put a filter on things and just understand it. Every time that these things happen, there's some sort of drawdown, and all of a sudden, 2 days later, it's back up and going. There's a reason for that because people are actually thinking through the mechanics of what happened, and other people at the time were just taking advantage of people. But yeah, I think range bound for a bit, but I think Tesla is stacking catalysts now, and they're stacking them so high that at any one point in time, you could have some news come out. Now, there's also negative catalysts out there too, right? There's, judges doing things. There's, NHTSA
It's
opening probes with, 8 days left to go in office, and they're just like, oh, let's probe something else now. And that's their job. They have to do it. It's fine. Um, but yeah, they're definitely stacking catalysts, and so I think you have to be careful, trying to, I always joke about cover calls and options, and people that think they can guess the price of Tesla by the day, more power to you. I don't know how the hell you be able to do anything like that.
all right, Jeff. Again, thank you so much for being on again.
Take care. Have a good one, Randy. Happy New
One last note on tariffs. Tariffs would be a one-time situation, so it would not be inflationary. It would impact prices in the year that the tariff is imposed. And then, of course, from then on, that product would be higher, but it would be a tax, like putting on a tax. It's not like labor, where the next year the labor market would require another increase. It's not like any other aspect, properties going up in value year after year after year. It's a one-time deal. So it's not an ongoing inflationary impact. Okay. Anyway, let me get down to the numbers then. The numbers are pretty flat in the after hours, but let me start with what happened during the day. You had the Dow up 0.25%. You had the NASDAQ down 0.06%, the S&P up 0.16%, Tesla up 0.15%. So basically outperforming. You have Tesla doing better than the NASDAQ, so that's a good thing, and just a little bit less than the S&P. You had the Magnificent Seven completely mixed. It's like green, red, green, red, green, red, right down to NVIDIA, which was down a tad, 0.02%. And you had the Cathie Woods almost all down, but all seeking the green at the end of the day. Everybody was running up toward the end of the day in the Cathie Woods group. Okay, so let's go ahead and take a look at everything else. We have got, whoops, we have the bonds, which have not, the pre-market's not open yet on the bonds. But we did have today's action. We're still sitting at 4.693. It was as high as 4.7. That's not appreciably less, but it is a little less. We had good news today from the consumer credit side. The consumer credit score, the amount of consumer credit actually dropped and dropped significantly. It'd be interesting to see if that is a 1 month in a row issue. As we know, one data point does not really count. You really need to see two or three in a row in order to see if there's a trend. But it was significant, and it was but it didn't impact the bond market. We kind of thought it might, but it didn't actually. We have oil sitting about where it was. It's basically unchanged. Texas Intermediate is completely unchanged, 0.06 cents at 73.25. You've got Brent, though, up. I'm sorry, down even more, down 83 cents, down to 76.22. But that makes that $3 difference, which we normally see. Natural gas up a little bit in the pre-market, 0.60 at $3.67. Gold up $7.70 more, continues to march towards 2,700 at 26.80. Silver holding above $30 at $30.75, up 0.18 in the pre-market, and copper also up 0.18%. We've got the dollar flattish, really flattish in the pre-market, but sitting at very, very high levels, impacting everything. Bitcoin down 1,300 at 95. It's been right in that very narrow margin after it came off the 100,000. It's been sitting right around 93, 94, 95 for a few days now. And then you've got the pre-market tomorrow morning. The suggestion for how things could go tomorrow morning is pretty much unchanged. The Dow down 0.03, S&P down 0.10, NASDAQ down 0.16. And where is Tesla in the after hours? It is down 0.28%. So wiping out today's gains and down about the same amount now as overall, down about the same amount as it was up at the close, or about 58 cents. Down $1.14. Yeah, very close. Okay, so that is where the numbers are right now. I think, well, I don't think that I think the market will be really flat tomorrow. Oh yeah, that's right. We have a day off. As I think it was that Nick that mentioned last night. We have 4 weeks in a row. Might have been Brian. 4 weeks in a row where we have a day off. That's very unusual. But we do have the day off tomorrow to celebrate the passing of a good man. He may have been a horrible president, but he was, I think, a very good man. And let's see, is there anything else? Yeah, hit that Patreon. That'd be wonderful. Liking and subscribing, all that stuff, notifying, all that stuff would be fantastic. And yes, earlier today, Brian Wang, I think a lot of you missed this because I put it out at a weird time. So I'm going to put the card right here. You want to go back and check that out. Brian explains how he sees the 20% margin at the end of the month here when we do the earnings. He also explained some of his thinking about where the market is right now in terms of both the fundamentals and the charts. Very good session. If you want to go back and check that out, it is right there. And that's all I've got for you right now. It has been great talking to you.